All right, guys, you're welcome back to my YouTube channel. How are you doing today? Okay, this is just like a follow-up video to the last one concerning institutional trading style. That shows methodology on entry patterns. You know, I already explained to you that this is how what you should look out for in the market. You know, it's very, very important when you are looking for an entry in trading from order blocks, right? You need to spot liquidity. Yeah, and you know, this is really what will make you stand out among those people that actually claim that they are trading institutional trading style, or maybe smart money concept, or whatever name that they've actually given to it. Now, there are some things, even though when the market is actually going to go against you, right? But at first instance, you would have taken the best entry that nobody would have actually taken. So I'm going to guide you through 3 pairs on how you would have actually taken these entries. And these are the trades that actually happened this week, being between I'm actually recording this video on the 26th of August, so you should actually calculate that in this particular week, that is majorly the entry. And you know, I told you that the minimum I always go out for, right, is 1 to 10 risk reward ratio. So this implies that when I'm risking 1%, even though I don't risk 1% on my account, at least I risk 0.25 on my account. I'm actually very strict in risk management in that manner, right? If you risk 1% of your account, you should be looking for a profit of 10% on a trade. And you can actually be, you can be so organized and very systematic in the way you trade by you writing down your rules and what you should look out for. And this really make trading not to be a gambling or a game of probability in quotes to you, or what you are not sure of, or what you are just guessing. So it's very, very important. Now I'm going to start from EUDJPY, but before then, there are some things I really want to paint to you, and these are the patterns you look out for in the lower time frame. So when you have a rejection zone, let's say you have this price moved and higher high, then created the lower low, you know, basically you should be looking for a rejection zone. So before price will go out for this particular zone, let's say this is our rejection zone. Let's say this is our rejection zone. So we are expecting price to actually form in a squeezed manner. When we go to 5 minutes time frame, price should be moving back into the zone in a compressed manner. And before price will get to this zone, you should have actually created a liquidity zone, then also take out that liquidity. This is very, very important. Then price rejecting your zone before dropping down. Now, this is the pattern you are looking for in the market before you trade. And this will really change the whole way you look at the market entirely. And at the same time, you must remember the rules I taught you concerning the strong order block, or the order block that works, or the order block that is very, very impossible for you to break through. Because nowadays we have, because of the condition of the market will just break through a zone. And most traders, I've actually seen many traders are trading my method, they would have actually complained that, oh, their zone is not holding. Is as a result of you not spotting the best order block. Now, there are some times whereby this block that we actually consider not to be so good can also work out. So this is why we always say that nothing is really 100% in this trading game. But there is a way you can actually trade. You can have a road guide system, and for you to really take the best kind of trade. Okay, just like what I said the minimum we should go out for is 1 to 10, but because of personalities, I'm still going to make a video on why most institutional traders actually fail. I'm going to make a video concerning that, so that you can actually learn from it, and you will see why some people that are actually trading in the retail style are actually making money more than you that are trading in quotes institutional or trading with the banks. So I'm going to get that video out so that you can actually see it and actually learn from it. All right, so before we continue, just like what I said, 1 to 10, but you can decide to take 1 to 3, right? If that is actually okay for you, you can decide to get 1 to 5, and you can decide to 1 to 8, 1 to 7, 1 to 10, even 1 to 15. But I actually will say this to you, that whatsoever really fit your personality or fit your emotion or your psychology, that is what you should really go out for. You should not really say, because people are going for 1 to 100, 1 to 200, 1 to 10,000. If there is anything like that and you really think that, okay, do you really want to get that? No, don't start from there. No, that you can actually hold trade to actually get to 1 to 2, or maybe when you just see a little profit in the market, you just really want to close it. You should know that your psychology cannot really endure taking a longer trade. So you need to set a rule for yourself that I only want to take 1 to 3 out of this market. And when I've seen this, I'm actually fine. If you can actually guide yourself through this, I bet it with you, at least if the market is not going to hold, you would have taken your 1 to 3, 1 to 2, 1 to 5, as the case may be from the market. And trust me, you will be so much consistent. Just like what I told you, my own is to go from 1 to 10. So in this sample, I'll be going for 1 to 10 likewise. Okay, follow me as I will explain that to you. All right, so seeing through this, let me clear this first. Through this zone, right? This was the zone we're actually looking out for. I'll be very fast, please just pardon me, right? This is the zone we are looking out for as our rejection zone. So in this slide, I would actually prefer to refine this into a time frame. You will pardon me. Now, this is 15 minutes time frame. So let me go to 45 minutes and just see what is up in there. Now, there is a particular way I am going to refine this block to know the precise zone that market will really come back to for me to spot my rejection zone. So this is a zone that I'm really looking out for, that I want price to really pull back to. So I've actually refined that. There is a way I refine my pair that is way different from everybody. Now we can actually see that there is a liquidity zone here. So I'm expecting price to come back to take out this high before price will continue to go higher. So let me just put a line here as a zone of liquidity. So we took our trade from 15 minutes time frame, from 4-hour time frame into 15 minutes time frame. And just like what I said, I want to see liquidity grab. Now, this is a liquidity grab, and you can see the reaction of price action. It is not so impulsive, and this is another liquidity grab in here. Now, this market did not really give us a trade before the day close. So in the following day, I believe this should be Asian section, right? What did I see here? I can see that price actually created a very impulsive move into the rejection zone I have already marked on the higher time frame. Let me go back to the 4-hour time frame and just use the right box for this, the right name for it, a rejection zone. That is our sell rejection zone I'm actually looking out for. Now on the 15 minutes time frame, so I have already seen, let me see 5 minutes time frame, I can actually get a good zone there. Right, I've already seen how this particular price action is, right? So in this light, I will be expecting price to really take out this liquidity. You can see prices are accumulating, and I see this double-sided impulsiveness. This is one of my reversal pattern. Double-sided impulsiveness, price actually created a gap. So in this light, I'm expecting price during Asian session or London session to actually pull back. Now, this trade was not taken by me, it was taken by a student. So that is why I just thought of it to make use of it, because I don't really trade during Asian session. So making use of this particular pair to explain to you how you would have actually taken this entry. Now, price, this is a liquidity zone, and we can actually have this particular zone here. So this is another rejection block that we will be marking. Now, you know, we are still on our higher time frame zone. So this is another way. This is way different from how I actually explain entry. Another style that you can really apply in the market when you really want to trade. Then we have a liquidity zone here. This is a sell liquidity graph that we have here. All these particular zone like an equal high. I'm going to label this as equal high. We have an equal high here, right? As you can see, that equal high is sitting around this area. So in this light, when price actually gets to this area, this is the zone I really want to go to 1 minute time frame for me to spot my entry. So permit me to really start the replay from here so that we can actually gain from it on how I would have really applied my methodology in taking an entry here. So let me go to 1 minute time frame in here, right? In going to 1 minute time frame, price already took out liquidity here. Don't forget, I'm expecting price to pull back into that rejection zone, this particular zone of the M5 that I have already marked. So let's go, right? So price is moving, price is already there. So let's see the pattern that's going to be painted for us, right? This man, I'm looking for a liquidity grab, break of market structure with a very strong move before I am going to be a seller. Now, I have one here, right? Price actually move up in an impulsive move, but we can't really see a clear break of market structure here. So let's continue and just see through it. So this price action came up the way up here, broke the structure. So I'm very careful so that I can actually, I'll be able to spot the right entry for myself here, right? So this particular trade zone has an impulsive move that break market structure. Also, it took out liquidity. Can you see the previous high that was taken. Now I'm going to go to 15 minutes time frame and remove this particular block here so that we can actually have a clearer view of this now. So price took out this liquidity as an impulsive move, which is what we are looking out for, and also break market structure. So this is where we are going to find our entry from, right? This particular zone, that is where we'll be looking out for to get our entry. So our stop loss is here, and we can just add a few pips to it so that we can actually cover up for spread, right? I know some broker can actually not activate 2 pip or maybe 2.5 or 3 pip. So you need to know what your broker can actually permit you to trade before you can actually trade in this manner of this very tight stop loss. So just like what I said, I always cap my stop loss to 5 pips and maybe sometimes 3 pips, sometimes 3.5, depending on the pair I'm trading and in which light I really want to trade. So our target is 1 to 10. So just let's see what will happen. 1 to 10, that is what we are looking out for. So let's play this and see what will happen, right? That's what we are looking out for, 1 to 10. Right, so we have another particular another pattern here that was formed here. We have an impulsive move, but before I trade this, I want price to have actually given us a liquidity grab, right? Before I take, because looking at this already took out liquidity, and this particular one is in the middle of the range. So we cannot just put our pending order here and be expecting trade to be activated, or else we'll be stopped out. Though I'm going to put my order here, but this will not be traded until price actually gave us a liquidity zone. So I'm going to play this gently so that we know if I should remove or no. This is not really good. Though it has been activated, but this is not good. Why? Because it doesn't really give us a liquidity grab before that will happen. So that's why that particular order is not good. So we still have this first one that we've marked as our entry, and we're looking for 1 to 10. Now our trade has been activated. So let's go to 5 minutes time frame so that we can make this faster. 5 minutes time frame and see what will happen. Right, we are looking for 1 to 10. Let's see if this trade will take place. 1 to 10 risk reward ratio. 1 to 10, 1 to 10. Let's see if this trade will work out to give us 1 to 10. Boom. Right, our TP was smashed here. So we already have a 1 to 10 risk reward ratio in this particular trade. So when we've taken this trade, now you can go to another, lower time frame again and spot re-entries if you're unable to take your trade immediately here. But this is really what you can actually apply for you to spot the best entry. So we are going to EURJPY to see what we are expecting from the EURJPY. Let's see EURJPY. All right. Now on the EURJPY, we just go to 15 minutes straight and see how it took this. Now, the reason why this trade was taken on the 15 minutes time frame, I'm just explaining to you how you can take trade on an order block. Now, if you look at this particular pair, right, you can see that market structure is bearish. Now, market structure is bearish, is bullish rather. So I'm going to confirm, I'm going to mark that for you. So let's see how that will be. Right, we have this is a lower high, right? This is a lower low. Try to, right, it's a lower high. So we have a lower low here, lower low, right? This is a lower low, right? Then let's call this higher high then. Call this higher high. So we already know that market is already bullish. Then we have lower high in here. We have lower high here. Then we have higher high here. We have higher high here. So let's go. So in this particular instance, we already know that the market structure is already bullish. So we can mark this particular rejection zone as where we are looking out for. So you can go to lower time frame and begins to look for your 1 minute entry. So with this, I am going to play the replay from here. So let's see how price will react to this. Don't forget the rules I've given to you. Don't forget that rules. So let's go on 1 minute time frame. That is where we are looking for our trade on 1 minute time frame. So let's go. Right, price is already on our rejection zone. Well, price was accumulating here. Can you see before price pull back? So in this slide, let's see where is the best zone for us to trade this pair from. Right. I hope you can see my candle in this manner. Let me just pull it in this way. Right. Does this take out liquidity? Right. This took out liquidity, but not perfect. Not perfect. So let's see the one that will take out liquidity for us and break market structure. Here, we have this particular action, it took out liquidity, and at the same time, it broke market structure. So this is the area we are going to look to buy from in here. Don't forget we're trading liquidity. So let's look how to buy this pair here. Our stop loss is this. Our stop loss is about 0.8, but that's really too tight. So we can leave it at 2.5 just to be safe, 2.5. Right. So we can target 1 to 10, right? Can target 1 to 10. This is 1 to 8. 1 to 10, where are you? Right. This is 1 to 10. So that's what we want to target. And also, just like what I told you, you can also go to 15 minutes time frame and just target this high. That's the next liquidity zone. But because we are looking to really trade 1 to 10, that's why I just leave it at that. So let's go on. Let's see what happened. This trade we really activated. Yes, our trade was activated in here. Our trade was activated. So let's see what will happen. We're already in this trade already. I will go back to the 15 minutes time frame. Let's see if this will play out. Right. So our entry, our TP was smashed in here. So I hope this really makes you to understand the basic things we are actually doing in this particular method so that you can really understand how you would have actually picked entries and how you follow it. And lastly, let's look at USDCAD trade. Now, this was picked 24 hours time frame, right? This trade was picked 24 hours time frame. We spot a rejection zone here. With this rejection zone actually has a space that it hasn't refilled and came back to break the structure. So we have a break of market structure here in this particular low. So in this light, you go to 15 minutes time frame and see what is really happening there. Now, in 15 minutes time frame, what can we see? We can also spot another liquidity graph here. As you can see that, let me put this BMS sell liquidity graph. So as you can see that is the liquidity zone. Then also we have about our 3-8 pattern that was actually formed here. We can consider this as 1, 2, then 3, right? You can really trade it in that manner, 1, 2, 3, right? So let's go to 1 minute time frame. Now with this, I really want to give us a playback so that we can really spot how to take that entry. So from this area, that is where I will go to the 1 minute time frame and just play to you how you can take the entry. So let's go. Let me just play it here. I think I've referred this. So we still have our line. One price to really get our rejection zone before we are looking for entries. Again, if price is not at your rejection zone, you have no business to actually look for entry. Until price gets your rejection zone, our liquidity zone was taken. So one price to actually get to our rejection zone, right? And price is there now. So we have first liquidity zone, we have another liquidity zone. So in here, we are looking for break of market structure before we continue to trade. Now, this will have actually be our entry. This particular area should have actually be our entry, in which it should really, but we want to allow it to break market structure. Why? Because in a lower time frame, this should surely be a block. So let's go to lower time frame. Right. It has already broken structure here. So invariably, I'm going to put my entry at this particular area and my stop loss maybe here, 3.5. Right. And I can be targeting the next liquidity zone. Right, I already moved that too much. Yeah, 3.5. Next liquidity zone. But let's see if we can get another price action that will actually give us a good view. So let's go. Right. So we have another one here. So we have another one here that we can also make use of this particular zone. I'm going to put my entry here. because if you actually go to a seconds time frame, this is really going to make sense. I'm going to put my entry here and my stop loss above this zone. This is also not a very good view anyway, but we can still make use of it. So this is going to be my second entry, this high here and this particular zone. Why? Because this actually take out liquidity if you look at that. But I'm not just going to put my entry here until I have seen a liquidity grab. Until I've seen a liquidity grab, then I'm not going to put my entry there. So let's just play it and spot if we can actually spot a liquidity grab before then. All right. So actually, this looks like a zone of a liquidity zone. Don't forget, this is the area, look at my crosshair, this is the area I really want to put my entry. This particular zone, let me just mark it from this particular area to this area. That is the exact zone I don't want to put my entry, but I want liquidity to actually be taken before then. So let's go. Let me just put my entry here. Don't forget, we are looking for 1 to 10. Right, that's my entry. We're looking for 1 to 10 risk-reward ratio. So let's go. So this actually gave us a liquidity zone. This is liquidity zone 1, this is liquidity zone 2. So let's see if price will actually come back to this particular zone here. We activated. Right. So we activated. Trade did not come back here. But let's see if we can still get another entry. Maybe price will come here, or price will just give us another structure. If I spot another structure, then I'm actually going to be trading from there. Now, this is a good entry. Price already activated this trade. So let's go. Right. We have a perfect one in there. So let's just calm down, because this is a liquidity grab and price is also rejecting on this. I'm actually expecting another entry in there because I really want to take 2 entries in this trade. Right. So this is a perfect one here. Impulsive move, took our liquidity, rejecting on this block. I want you to break the structure in there. Right. That structure is broken, so we can make use of this particular zone 2 as our entry. Right. We can make use of this particular zone as our entry. So let me put my pending under here. I'll put my pending under here. Put our stop loss here to the pip. Then we can be looking for 1 to 10. As a case maybe, I'm still going to increase this to 1 to 10. Let's just play it on this 1 minute time frame to see what will really happen. So let me delete this because I'm not sure price will come back to it. That's the first one we set, but this second one is still running, and we're already in 1 to 5 already in this second one. Right. So this is the third one. Let's see if price will get there, or we can spot another entry zone. So I'm just explaining this thing to you so that if you actually get to the market, you can as well spot this particular zone. So let's see what price is doing. You should know that one is already running. Right. This is another entry. I'm not sure if price will surely come back to this. This price took out liquidity here. As you can see, this particular area, it took out liquidity and price is rejecting on this. So in this slide, this particular area that has not been retested will be where I'm looking for entry on. This particular zone will be where I'll be looking for my entry. So I'm not sure this is actually going to come back to this, but anyway, if it comes back, then there's no problem. Let me delete it first. But you should know we already have an entry. I don't really want to cloud our chart with so many indicators. That's why I'm really removing those things. So in this slide, this particular block here, I'm expecting it to also be where I want to trade from, right? Because it already took out liquidity and it's breaking rejection on a zone, all right? Rejection on a zone. Not only that, right? It gave us a gap that has never been retested, which is actually a fair value gap or an engulfing candle. So price broke down. So my entry will be here also. Don't forget, we are looking for 1 to 10. These are stop loss. Let's play at 2.5 or so. Our stop loss should really be here, but I'm just lifting it high because of spread and the likes. As many people have actually been asking questions concerning that. So I want this trade to be activated before we go to lower time frame. Now, this trade has already moved 1 to 5. Now we can still drag it. Don't forget, we're going to 1 to 10. I just leave it at that. Let me go to 5 minutes time frame. In 5 minutes time frame, let me bring this to 1 to 10. This is 1 to 10. So that is the zone I'm actually looking out for. Let's see which one we actually gave us. Right, and this trade was activated. The second one was activated. Let's go to 15 minutes time frame now. Second one has been activated, so let's play it out. Boom, we have 1 to 10 here. No, this one is not 1 to 10. The second one is 1 to 8 and 1 to 10. Yeah. Right. So we have 1 to 10 here, another 1 to 10 here. So it's just a simple way you would have actually applied these particular rules in this. Don't forget, liquidity is actually the most important thing. Now, there are some videos I'm really going to produce. I'm going to explain how to spot the best order block, how to use fair value gap, now how to use a breaker block, how to spot a liquidity gap. All this particular content is what I'm seeing to produce. So if you like this video, right, I will like you to also hit that like button so that it will actually give opportunities to many more people to have access to it. It should be recommended to them and they'll be able to study this and have the opportunities that you're so enjoying. And also, don't forget to subscribe to this YouTube channel. What are you waiting for? And very soon I'm going to start live on my Instagram page. So you will also do well to follow us on Instagram and join our Telegram page. Also, our mentorship class is open now. Is actually going to give you opportunity to see much of this, because I'm really going to produce much of this content now for you to backtest and actually practice in how you would have really applied chart or markup. You actually see my thought process, what I do in applying these particular skills and methodology in my trading hours. All right, if you actually enjoyed this video, don't forget to subscribe to the YouTube channel and click on the notification bell so that anytime we upload a new video, you will have access to them. Not only that, like this video. If I can have 500 likes, just what I said in the last video, right, I'm going to produce much more quality content to you. So until next time that we see, have a good day. Bye-bye.